All right. What is up, traders? What's up, Spoons? Super excited for today's video. We're going to talk about one of my new favorite indicators. It's super simple, and once you guys see how to use it, it's really going to change the game a lot for you. Now, what we're talking about in today's video is the standard deviation channel. We're going to go over 1 versus 2 standard deviations. We're going to take a look at swing trades and day trades, right? How you can use it for, different trading styles. We're going to go over how to identify potential entry points, setting stop losses, and then you can combine it with other indicators that you like as well. And then you want to practice this, get used to it, and practice eventually makes perfect. And you guys will see that this is a really nice indicator that if you're having trouble, spotting potential entries and spotting potential exits, this can help you guys out a lot. So be sure to smash the like button, subscribe to the channel if you guys are new. I do want to mention I do have a completely free newsletter for you guys. It's called Investment Intelligence. There's a link in the description and comment section down below. Not only do we go over free valuable content in there, but I also do put out free trade ideas. This is a recent one on Tesla from a couple weeks ago. And you can see Tesla rallied tremendously from that trend line break from the abandoned baby bullish chart pattern that we went over, right? And it held above its recent lows. And if you trade options, those were very profitable. Okay, so sign up for the free newsletter, link in the description. You can always check out Ko-Fi as well if you guys ever want to request a specific YouTube video going over a specific strategy. Maybe you want some, a specific stock analyzed or something. You can do that via Ko-Fi, all right, on the commissions page, or you can also book a one-on-one personal session. There's 30-minute sessions and 1-hour sessions, as well as you can buy me a coffee on there. It's kind of a way to leave a tip or donation if you enjoy the content that I put out for free. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. Now, what is the standard deviation channel? Well, it's a volatility indicator that plots lines above and below a linear regression line, helping us identify price volatility and potential reversal points. So this is what it's going to look like on your screen. Now, towards the end of the video, I'll take you guys over to Thinkorswim and show you guys how to set it up on Thinkorswim to make it look just like this. Now, you have 1 versus 2 standard deviations. Now, using 1 standard deviation captures about 68% of the price action, meaning that 68% of the time, price action is going to stay within this 1 standard deviation. Now, in this chart, it's going to be the blue lines here. Now, while 2 standard deviations, that encompasses roughly 95% of all the price action. And so depending on your risk appetite, you can choose which one suits your strategy best. If we take a look here, a daily time frame or a 4-hour time frame or a weekly time frame, those are going to be the charts that you might want to look at for swing trades. But if day trading is your game, then something like a 15-minute or even a 5-minute chart or lower is going to be where you want to look at, right? So that's how to use a strategy relative to time frame, right? Now, to identify potential entry points, when price touches the lower channel, it might be an opportunity to buy. So you can see here, we're touching that 1 lower standard deviation, and then we rally upwards towards the top, and we get that 1 standard deviation at the top. Now, that's a pretty significant move going from 180 all the way up to, like 280 right here. Very, very significant move right there if you were able to capture that trade. And so if, when it touches the upper channel, that could be considered a selling signal, right? And so you see here, it touches that upper channel, it drops, it touches the upper channel again here, drops, touches the upper channel here, drops, right? So these are possibly good selling opportunities whenever it touches the upper channel. Now, when it comes to setting a stop loss, okay, there's a couple ways to do it, right? You can enter in right there at the standard deviation, and you can put a stop loss, at your standard deviation or just below it. If you want to get a little bit more precise, okay, you can use the ATR indicator. This is your average true range. That's what ATR stands for. And once you throw that indicator on there, it's going to give you a value, okay? So if you take a look right here, we drew a vertical line at where the entry would be, and then we want to come here and look at the ATR. It's $3.79. And so you would subtract $3.79 from your entry point, and then that would give you a stop loss. This way, if Tesla, in this case, Tesla, right? If it just moves $1 or $2 to the downside, you may potentially get stopped out of your play and end up missing on the real move, right? The real move after it goes up. So you can use the average true range as a way to give yourself a stop loss if you're not, too good at setting stop losses, or you always wonder where to put it at. The ATR is a good indicator to help you guys out with that. Right. So, that's some of the ways to set a stop loss when this play, because as always, risk management is very important. And then at the end of the day, you can always combine it with other indicators here as well. So for added confidence, you can combine the standard deviation channel with other indicators like the RSI or the MACD. This can help confirm potential entry or exit points. So, we take a look here, we see our entry. What do we see on, because we're hitting that standard deviation level, what do we see on our RSI? We see that it's oversold. It's below this line here, right? It's below 30. So it's oversold on the RSI here. And then we look at our MACD, and very shortly afterwards, we actually get a bullish crossover, right? So the gray shaded area here is after hours. So you enter here, or maybe you're a little bit more patient and you want to wait a little bit, and you see the next trading day, we actually got a bullish crossover here on the MACD after coming out of those oversold conditions and bouncing off of the standard deviation channel. Maybe now you enter into a position and you ride it up towards the top. Okay, so that's how you can combine it with some other indicators such as the RSI or the MACD, or really there's lots of other indicators too. There's stochastics, just whatever floats your boat. Now, practice makes perfect. So before diving in, you want to practice using this indicator on a demo account or with paper trading, get a feel for it and understand its nuances. Every single stock is going to perform differently, especially relative to the standard deviation channel. Okay, not all of them are going to look exactly the same, and different time frames are going to respond differently to the indicator as well, right? We'll actually go on over to TradingView real quick now. All right, so here we are on the S&P 500 with our chart set up with all of our indicators. Right now, let's go ahead and remove all these studies, and that way we can go ahead and show you guys how to set it up and make your screen look just like this. So go ahead and click on studies here. We'll go to edit studies, and we talked about the ATR, the average true range. We'll go ahead and throw that on here real quick. Okay, you can just hit add selected. We also talked about using the RSI. We'll go ahead and throw this on here as well. Okay, and we also talked about using the MACD with this. Now, the MACD looks a little bit different than how I had it. I like to make the MACD really simple. Okay, and so I come here and I like to change this one to white. All right, and I like to change this one here to red, make the lines just a little bit bigger so it's easier to spot. Okay, and then these, I just unclick, show plot, show bubble, show title, and just get rid of some of these here, just so things are a little bit simpler for me to see. And so I basically just keep the 0 line, the value, the average. Okay, we'll come in here, hit OK, we hit apply. And now we have our ATR, our RSI, our MACD on here. And now we need to put our standard deviation channel. So we'll go ahead and start typing in standard. Come here, standard deviation channel. Now you actually need to add this twice, okay? And I'm going to show you why. When we come in here and hit apply, it only gives us the one form of standard deviation. And if we go back to the settings here, all right, and we actually take a look and click on the settings, the deviation is set at 2, right? So it automatically on Thinkorswim defaults it to a 2 standard deviation. And we know that it very rarely hits that 2 standard deviation level. Now, that's fine. I still want to keep it on there. What I'm going to do is I'm going to change this to red, the upper line, and the lower line here as well to red. And this is my 2 standard deviation now. Okay. And we come in here and we're going to put the indicator on again. And now we're going to change the setting from 2 standard deviation right down here to 1. Okay. Put this to 1. And I like to make the upper line this nice bright blue, the lower line this nice bright blue. We come in here, we hit apply, and now we have it on there. So again, this is the S&P 500. This is on a daily time frame. We talked about how, time frames such as the daily might be better for, swing trades. And so we take a look here and let's try to identify some places where it's hit those standard deviations. Well, we can see here it hit the standard deviation, right? And we had a nice rally to the upside. So that was a good buy swing trade opportunity. Same thing over here. We came down, hit the standard deviation. All right. And then we had a nice rally to the upside. Again, another buy swing trade opportunity. But other than that, it really doesn't touch it this much on the daily time frame. So not too many opportunities here. Now, if we come down to, or we zoom out to a weekly time frame, okay, and we were to take a look at this, look at where the bear market lows were when the stock market bottomed most recently in October. Look at where it came to. It came to that area below the 2 standard deviation. Okay. And the reason that this is significant is because remember, price action contains about 95% within all of these 2 standard deviations. So we briefly dip outside of it. Okay. And that's that 5% that we trade outside of it. And that actually pointed the bottom in the market, and we've rallied significantly. So if you're using the standard deviation channel, this would have actually been a buy signal for you. And, it could have been a really, really good trading opportunity for you as well. Now, what's also significant is it also seems to have called out the top, right? Look at when the stock market topped out recently and made all-time highs. You can see it was actually trading outside of that 2nd standard deviation there. So remember, in the beginning, I said that this is going to be a really simple indicator that can really help you guys out a lot, potentially looking for, different trades and different opportunities. If we were to zoom into, a smaller time frame, such as a 1 hour, okay, you can see on the 1 hour here, once it's trading outside below that 1 standard deviation, we can take a look at our RSI here. We see it's oversold. Very shortly afterwards, we get a MACD crossover, and you can see we ride it up here back to the middle line, and then we actually ride it up here back to the top line. Okay. And then after we hit the top standard deviation line, remember blue is 1 standard deviation. What do you see? We start to sell off. Well, let's look at some of our other indicators. We're also overbought here on the RSI. Okay. And we also get a bearish MACD crossover here, with the white line crossing below the red line. Right. And so now this is another potential opportunity to ride it back down. We start trading below the 1 standard deviation here. Okay. And what do we see? We see, again, we are oversold. Okay. In this case, we actually form something known as bullish divergence. I'll explain what that is very briefly if you're not familiar with the term. But here we have a low. Here we have a lower low. And on our RSI, we have a low and we have a higher low. So if you're trying to look at this for, how do I know if this is a potential trade idea? Well, one is you're trading below that standard deviation line, that blue line here. So that's a potential buy signal for you. Okay, number two is going to be the bullish divergence. Now you see bullish divergence here. And what could potentially be a third one? Well, you see here, we actually got a MACD crossover, right? We saw the white line cross above the red line, and that's potentially number three. So you can use this all as, potential entry signals, to go long on the S&P 500. This is some examples of a 1 hour time frame. If you zoom down smaller to something like a 5 minute, you can see most recently, okay, what are we doing? Well, we come up and we start trading above that 5% standard deviation, or that 2nd standard deviation, which we know only encompasses about 5% of price action whenever it's trading outside of there. And what do? We start falling afterwards, right? And we've had a significant drop down from 451 down to 443 here recently. Okay. And so, this is just a good visual of how you can use the standard deviation channel across multiple timelines. And once you use a specific time frame that you're on, right? If you're trading a 5-minute chart, you want to stay on the 5-minute chart. If you're trading a 1 hour chart, the standard deviation channel is going to change as you change each time frame, right? So, it's very important to remember which time frame you use as an entry, so that way, it'll be more relevant towards your trade, and you'll have better success with it versus constantly flipping through the time frames and saying, oh, well, here, we're above the 1 standard deviation, getting close to that too, and then you zoom down to a 5-minute. And you say, oh, well, we're trading below the blue standard deviation on a 5-minute, maybe I should go long. And then really, the play just continues to drop, from your original 1 hour chart that you were looking at. So that's it for today's video. Okay, just a brief one. Remember, there's that free newsletter with really good, valuable content, as well as free trade ideas you guys can sign up for using the link in the description. If you guys are interested and you ever want to book a coaching session or a one-on-one session with me, you can also do that through the Ko-Fi platform, as well as request a video. All right, I do viewer requests, and you can go ahead and commission those on the commissions page via Ko-Fi. So appreciate you watching. Smash the like button, subscribe for more.